Let's talk about the rapid developments within the Nigerian banking sector, even as the latest results are still in the analyst's crosshairs. The sector regulator that the central bank has come under pressure as well, based on some of its policies and actions in the areas of interest rates, savings, investments, exchange rates, and so many others. Speaking to us now on some of this is Lanre Buluro. He's the managing director in charge of capital markets at Chapel Hill Denham. Of course, Chapel Hill Denham is an investment bank and a licensed securities trading firm by the SEC and the Nigerian Stock Exchange. Lanre, good evening. Welcome to the show.
Hi, Bosun. How are you?
Let's go straight and grab the headlines in the banking sector. Give me your top takes.
Listen, earnings were released. All the banks have announced half-year results. Some impressive, none not so much, but I think the key takeaway is the resilience of the results we've seen so far. I mean, we all know what happened the past few months in terms of COVID, the lockdown. We on our side are quite impressed with the results we've seen so far. Some of the tier one banks, 3 or 4 of them declared interim dividends. Some maintain normal levels, some cut. But I think overall it's been impressive, and we're really looking forward to the second half of the year. I think one of the shocking or not so shocking, but I guess developing stories is GT Bank and their plans to become a holdco.
So why are these earnings subject of social media conversations really? What do folks really want to know about the banking sector?
I mean, overall, the quality of the loan book. As I said, there was a lockdown. The GDP was negative 6%. So understandably so, a lot of companies' output was quite slow. Cash flows were also distorted. So, and most of these corporates have facilities with these banks, and a lot of the banks and a lot of concern was about these companies paying up on their loans. Also, a lot of these banks had a very big thrust into retail lending. So a lot of individuals who were in employed jobs were getting loans from these banks. As you know, the unemployment number also came out, was very, very unimpressive. So a lot of people lost their jobs. So concerns around how are people, or how the banks, receiving, interest and principal payments on their loans. I think overall, banks were very, very prudent. 1 or 2 names were a little bit underperformed. But I think, from the calls we've heard so far, the banks, management of the banks are quite comfortable and optimistic that it won't get this bad. The smart ones in the room would definitely be very, very conservative and quite prudent when it comes to provisioning. So we expect that to read out over the course of the year.
Beyond the earnings, are there other issues that folks in the industry or in the economy are worried about or concerned about the banking sector, perhaps in relation to the industry regulator in terms of the policies and actions, whether it's relating to the FX or interest rate, or what a savers in savings accounts, savers in the accounts need to get paid as interest?
Well, good point. I mean, yes, of course they are concerned about that. The regulator is, what I would probably consider very activist in its activity. So it's taken some moves over the course of the year. The CRR is one. On average, about 42% of industry deposits is sterilized, earning zero, sitting in a vault in the CBN. That's one. There's been FX, like you said, and FX is CBN and also macro, right? Oil prices are down. Went as low as $9 a barrel sometime this year. As you know, it's a big contributor to the country's dollar inflow. And whenever liquidity in the FX market, stalls, it affects everybody. We all received alerts from banks where, your debit cards can only be used up to a certain amount. Now, with the CBN announcing, sales to the BDC, airports are opening up. We're really waiting to see how that trickles down into the banks. Also, the CBN announced recently, reduction on the minimum amount, banks can charge interest rates to customers. That is positive for the banks. From a cost of fund perspective, it helps them. But the other side of things too is, on the lending side, you might see some pressures in that area. Yields in the market, one of the things the banks do, banks are supposed to be financial intermediaries, but they do have a big trading business. They play the yield curve, and we've seen the yields really compress. And that's also impacted, some of the returns we've seen this first half of the year.
So when we speak about GT Bank, for example, in terms of restructuring, this is one bank, a household name over the last 20, 25 years and north of that. So do we have some insight into what is going on in this orange color banking institution?
Well, from what the management discussed on the call yesterday, I mean, just reiterating what it mentioned early this year about its plan becoming a holdco. I think GT is one of the forward-thinking banks. Very strong management. I mean, they definitely understand the landscape, and they're thinking about the future. Your day-to-day banking. If you have a very good balance sheet and you can manage your balance sheet, is pretty good. But I think going into asset management. Looking at the payment space, and it's also, if you look at it, it's just not Nigeria. They're also looking at an Africa strategy from a payment standpoint. And the management was quite emphatic about its plans in those areas. Even hinted that he might become a PSB, competing with the telcos. But I think on the asset management side, I mean, if you see what Stanbic has done as an organization, it's very impressive. It's a wealth management business. We all know that. And I think GT is, taking a look at that and saying, listen, I have a bank, I have a branch network. Why don't I look into that area? I mean, come rain, come shine. If you're managing assets, no matter how bad the economy is, you're collecting management fees. In some cases, 1.2% on AUM, so 1.5. And I think, the GTB management, sees that and says this is quite interesting. Listen, if you bet on GTB, I don't think it's a wrong bet. It's a new space for them, so I think people need to also be quite cautious about that. But again, management is quite bullish around these areas. I mean, management hinted around, the particular targets. We have a view on what it is. I mean, and it's something that if that does happen, I mean, it shows, the management is, is quite confident. About what they want to do.
Yeah, it looks like they're confident in what they're trying to pull off. The gap just between now and Q1 2021 to give us a brand new GT Bank, as it were. I'm sure you analysts and investment gurus are looking into how all of this go into the shares of GT Bank. They said they're going to do a one-for-one. How that moves out into having a new GT Bank as a holding company listed on the exchange. The way forward is all about the future. Lanre, let's expand this conversation into the real estate financing market when we come back after the break. Stand by, everyone. We'll be right back in 2. So, is real estate investment trust or REITs are viable funding options to resolve Nigeria's rising real estate deficit in residential, office, industrial, and other areas? Let's harvest some insight from Lanre Buluro, who is sitting right with us just out there from Chapel Hill, Denham. Lanre, let's talk about real estate investment trust as a subset of the financial services industry. What are the current dynamics in that space?
As you rightly mentioned earlier, right, it's a part of the GDP. It's a major part of GDP, and then the performance this past half year has been quite poor. It's down negative 20%. And again, there's limited activity during the COVID lockdown, which translated into what you saw in that area. But I think overall, and we mentioned also about debt capital, there's a lot of properties being built that, with no, good offtake, and it's a mix of, retail, commercial, that's out there. I think one of the biggest issues is also financing, finding, affordable, cheap financing. And one of the things, we're doing as a firm, is try to create vehicles to raise capital to unlock the value of some of these assets that we've really identified in the market today.
So what innovations are we seeing in terms of new offerings, such as what you folks are having on the streets right now? I think it's about 25 billion naira.
We are raising up to about 20 billion naira right now. It's called the Nigerian Real Estate Investment Trust. And what it is, we are approaching investors, institutional, qualified individuals, family offices, to raise this money and to acquire, fully tenanted, income-generating properties. And the strategy is very, very precise. It's built to be quite resilient in this kind of downturn we're going through. So we're focused mostly on commercial, retail, industrial, and there's some student accommodation that we are also platforms that we're also looking at right now. And given the dynamics we're going through in a downturn such like this, those sectors that we've identified have been proven to be quite resilient. And the key to that strategy is also acquiring these assets at really, really affordable prices where the cap rates that you're giving your investors are very, very attractive. It's kind of a buyer's market now. We see assets where very, very good assets that ownership is looking for liquidity, and they have some leverage in the asset, and they need to repay that exit. Some need liquidity to go on to the next project that they've been planning to embark on for a while. Look at the quality of the tenants that we see in these assets. Are very, very strong A-type quality tenants, paying really good rentals, and also sign very good, attractive long-term leases. So that's what we're really doing. I mean, listen, it's not a new concept. It's just our approach has been really tailored and built to adapt to the peculiarities of Nigeria. And we given our track record in infrastructure and in pretty much creating alternative assets in the market, we're really are very confident in giving the returns. The targeted returns we've announced to our investor base.
A sector down by about 22% is quite massive, if you ask me, Lanre. So what vitamin, what a shot in the arm, what kind of vaccine does this real estate sector in Nigeria need to create jobs and create wealth? Because it's tied to construction, it's tied to jobs, it's tied to so many things.
Ultimately, it's capital, right? Affordable capital, and also the regulation and the ease of doing business. To get a land, to get your CFO in Nigeria, it's very cumbersome. I mean, I spoke to a senior in the industry, and he said his biggest cost when he's putting up some of his assets is really land acquisition and all the paperwork he needs to do, the different taxes he has to pay. Because from a building material standpoint and everything, it's manageable, but a big portion of the valuation of some of these assets is the land itself. So state government, Land Use Act, I don't even know if it's going to fix or adjust it, but it's something that needs to be addressed. Capital, like you said, and one of the things, like I said, creating structures like a REIT is one way of creating that capital, raising that capital to unlock the value of real estate. Listen, real estate has a multiplier effect for the economy. The real estate sector itself is its own economy. So you put up a building, you're gonna, from the materials, from cement, from the laborers you're going to hire, the logistics to deliver the materials. Even when you go to a construction site, there's a from the food vendors, so you're creating jobs. The property goes up, you pay taxes on those properties. So it's a sector that government also needs to play a big role. And there's something. Listen, I mean, for us as Chapel Hill, we are leading the effort, and there are people also in the market who are doing something similar. But it's a company called Mixta. Mixta also is a very interesting company right now that's looking to, they've started already. They've built over 12,000 units of affordable housing across the continent. They've done a lot in Nigeria. So they're one of the names also that that we really like in that space. But like I said, for us is creating this kind of vehicles like the NREITs, to raise capital to unlock returns and value to investors.
Interesting conversation with you today. Lanre Buluro of Chapel Hill, Denham, Managing Director in charge of Capital Markets. Thank you so much for having you on Arise Exchange.